podcast is hosted monthly by John Kenny, CEO of Cotney Consulting Group and one of our Incubator Program sponsors. The Incubator Program was designed to partner emerging companies in the construction sector with mentors who will guide them to success. We will cover go-to-market strategies, operations and controlled growth, scaling, and more. This information is from our Incubator Program's hands-on training. We hope you enjoy the podcast.
Hi, everybody. Welcome back. We have another installment of our Accelerator program. And again, today I'm here with my friends and definitely industry experts on the insurance side. I can tell you that for sure. I've known this group for a long time. Nick and Tyler, how are you today?
Morning, John. Doing good, John. How are you?
Doing great. So today we got a good subject coming up that you need to pay attention to, because this, I know from my experience, it could be either like we were just kind of joking before the podcast, it's like waking up on Christmas morning, or it's like waking up and finding out the IRS has just done an audit and you owe all this money immediately. It's kind of the same feeling either way. So we're going to talk about insurance audits, reviews and consultations today. We're going to cover two major things in there. One is how you prepare for yourself and company for a workman's comp audit and a general liability audit, GL audit. And then after we talk about that a little bit, we're going to these guys are going to run through some strategies on how you can reduce the overcharges that usually occur with these audits. And a lot of times it really is the contractor's fault for getting overcharged because they're really not educated on how to properly do this. And that's what we're going to cover today. So I'm going to go ahead and turn it over to you guys, and let's get that information out here to the audience. I think this will be a real good one for them to, get prepared for their next one, which probably is coming up sometime this fall. A lot of them do.
Yeah, absolutely. Absolutely. And I guess we'll start here, John. And so especially starting out for contractors, projecting your sales and payroll figures. So on the work comp side, payroll mainly. On the general liability, they could be sales or payroll rated, but projecting has a fair amount of importance in it, because a lot of people start out and say, okay, my first year, I have no idea what to project. And so they tend to go lower. Well, for roofing contractors and some other risky construction trades, there's minimum rates on the general liability side. And so some people come out and say, hey, I'm going to do 50 grand in revenue this year or 100 grand in revenue this year. Well, we see, speaking roofing specifically, a lot of the programs that are going to cover you correctly have a $7,500 minimum premium. And so with that, if you rate yourself at 100 grand, they're typically just going to jack the rate up to get you to that minimum premium at $7,500. So a projection. So what we tell our clients is, hey, what's the probability that if you're projecting 100 grand, what's the probability that you could do 250 grand, land a couple big jobs and exceed yourself? Well, if you rated yourself too low and they jack that rate up and you do 2.5 times what you did, there's going to be a significant payment on the back end. And so that's one of the areas first that I see when we review so many new startup companies, when we review their policies, they're rated way too low for what their expectations are. And their rates could be very, very high compared to their peers. And so you can get yourself in trouble pretty quickly on the back end. So we always find that there's an efficiency point to say, hey, this rate at this revenue is going to get you to this $7,500 minimum premium. You're going to pay it anyways. You might as well build in the free growth from the beginning on the GL side. Work comp, it's not as risky. So work comp, when I say it's not as risky from a projection standpoint, work comp is rated on the payroll, and it adjusts two ways. General liability is only going to adjust up if you do less than what you projected. You're not going to get any money back typically in the excess and surplus line market, which is where most of these policies go. Work comp, a lot of these programs are pay as you go. So the projections don't necessarily mean as much, but more keeping control of your subcontractors policies, because that's where they get you on the work comp. Is if you hire a sub and at the end of the year when you're going to do your audit, if you can't show proof of certificate of insurance to your carrier, they're going to come back and charge you the applicable rate for the payroll that you processed under that class code. So I hire a sub that did 200 grand in roofing work for you and they didn't have a certificate to show, you're going to end up paying for that work comp premium on the back end.
And also too, if I just add to that, they got to have the correct certificate. Even if they can produce a certificate, if it's the wrong coverage, you're still responsible, correct?
Correct. And you know, with more sub work that we're seeing here in the industry, especially in Florida and other states as well, we're seeing a lot of work comp exemptions, one-man crews that are coming in. And so what they say is that the exemption's only for the officer of the company. Well, come to find out at audit, when an auditor is looking at this, say, hey, you paid this guy with a work comp exemption 250 grand. How did one man, who theoretically, if he's working for himself, is working for other people as well, how did one man with an exemption do 250 grand worth of work? And they assume that he's working for other people as well. And so it's just not logical to the auditor. And so that'll draw a red flag on an exemption. People are paying, and I've seen it time and time again. And work comp carriers do not like it. And they're typically going to come back and ask more questions and try and extract premium on the back end if they can from it. So that's one of the risky areas that I've seen. Gotta think logically. If you're paying somebody that much, they probably have a crew behind them. They're not just the exemption's only for the owner officer of the company. And so it's not going to fly at audit if you paid somebody that much under an exemption.
Yeah, the auditors are very intelligent, and they know the games, and it's just not worth trying to game the system, because you're going to owe this money. And it's a heck of a surprise to wake up after you get an audit and find out your original policy, whatever you paid, $20,000-$30,000 for insurance coverage if you're starting out a smaller company, and all of a sudden you owe that by 3 times in an audit premium. Not a very good outcome, and it could put you out of business as well. So you want to keep an eye on this stuff. And one thing I know you're going to get into strategies, but I'll throw in there, I know what I'd like to do, and I always recommend this for anybody I'm talking to on my end, is kind of do that mid-year double check, especially on the GL. I mean, it's like paying estimated taxes. If you're going to blow by it, chances are when the money's owed, it will guaranteed, it's Murphy's Law, it's going to be at the worst time of cash flow in your company. So if you can prepay it when things are really rolling and say, okay, I'm going to owe some more, let's throw 10 grand at it, I'm probably going to owe that or a little bit more, it's not going to hurt as much at the end. And then if you do overpay some, you're going to get it back. Anyways, I mean, I would never recommend anybody using your money. Same way with the IRS, you try to keep it near net zero. But these are things you do have to look at, because they can be, huge at the end. And I'm really glad you brought up the subcontractor one. That is probably, other than misclassifications and stuff, that's the one that everybody thinks they got it. They get an insurance certificate, they're covered. And I actually talked to a contractor the other day that asked how many people in his company could be exempt from workman's comp. I said, absolutely no one, once you get over a certain amount of employees. And other than that, it's you only. So I said, you better talk to, I'm like, you need to talk to your agent about that, because it sounds like you're going down a bad road. So that's something you don't want to get into.
Certainly. And then even from an audit perspective, what we see sometimes is monitoring the subs insurance on at least a monthly basis. Because what we see so often is, especially with employee leasing arrangements on the work comp side, you have a sub with an employee leasing arrangement. If they go a couple of weeks without payroll, their employee leasing arrangement, their PEO is going to drop them. And so when they see this cancellation date, because they will, the auditors at the end of the year, you may have received a certificate day one. That does not mean that that sub is able to work for you for the entire year, because that policy could have canceled the next week, and all that payroll built up throughout the year. They could charge you back on it. So you want to make sure that coverage is still in place and valid and has an effective date and wasn't canceled throughout the year.
Yep. And if you're a regular listener, these are things that we covered in the earlier episodes of this podcast. And if you just happen to join us for this one, go back and listen to these, because all these strategies are there throughout every single one of these episodes. And you'll see it's just like building a building, right? We've built the foundation as we've gone along, and that's exactly what Nick and Tyler are doing. They're giving you all this information every month that we do these to really build a solid foundation of understanding your insurance. So if you haven't seen all of them, go back and watch them. You'll get a lot out of it. And if you have, we got more coming. I think now probably, is there anything else you got on the audit side, or can we get into some strategies?
So one of the last things I think I would bring up on the audit. So keep it in mind as a business owner, because there's a ton of different ways that you could be tagged at audit on the back end, but keep it in mind this. If you're self-performing the work, know what you're rated on. If it's general liability, if you're rated on payroll or revenue, typically they're revenue rated, but there are some payroll out there. Understand what you're rated at. Keep track throughout the year. Like you mentioned, John, we always do a mid-year review with our clients to see how they're tracking. On the work comp side, if it's pay as you go, of course, you're pretty safe in-house if you're submitting the correct payroll and the correct class code, as you mentioned. Make sure your employees are classified correctly, because there's a significant difference in rate between field employees and admin, and what constitutes as an executive supervisor as well. That's one of the big issues too that we've seen is a lot of companies will have employee listed as an executive supervisor. What I've seen is at audit, when they share the duties of that employee and they share with the auditor, hey, here are my 3 executive supervisors, here's their role. The true definition of that executive supervisor is that there's supposed to be a foreman or somebody in between the supervisor and the direct field employees out there. So they're not supposed to be getting up on the roofs and directly sharing and pointing out what these employees in the field workers should be doing. They're supposed to be showing up on a job site and directing the foreman to then go up and direct the field employees what to do it. We see so many, if there's not that layer in between executive supervisor, they're going to turn around and classify them as a roofer on the back end. And the rate's about 10 times higher. And so there's, we've seen some audits come out on that end, but really just keep in mind and know what you're rated on and what they're looking for at audit. So if it's your in-house payroll and you're submitting it correctly, there's not much room for error. Now, your subs, make sure the certificates of insurance are valid. Make sure if it's an exemption holder that you're not paying somebody too much or it doesn't seem fishy, because if it seems fishy to you that one man can't do that job, it's going to seem fishy to the auditor as well when they see what you paid at the end of the year. And so if you're constantly keeping an eye on what they're looking for, how they collect their premium and what they possibly charge you for, then there shouldn't be much room for error or trouble.
And before we continue, John, the way that you open this up is perfect, and I'd like to reiterate it before we move forward. An audit can be a very simple process, or an audit can be, a contractor's worst nightmare, especially starting out. An audit, we could go on for 2 days about the things that auditors look for and what they don't look for, but the most important thing is they have seen a gazillion roofing contractors' operations. They know, like you said, the games. And, as you're starting out, you may not know. And it's so very important to have somebody that can help you through that process, because the insurance company is going to get premium. Either you pay it up front and smooth that out over 12 months, or they get it on the back end. You're going to pay them either in the beginning or at the end. One way can be smooth, one way can be painful. And if you truly don't know, burying the head in the sand, this is not the place to do it with audits specifically. It can be really smooth, like Tyler said, with some of the classifications and on the general liability. The more that you know about how these policies operate, the better that you can prepare, the less surprised you'll be, do a mid-year review like we've talked about a little bit, the less surprised you'll be at audit. And with those audits, no matter what those findings are, they're due in full. It's not like you can, start a payment plan for the next 12 months. And like you said, they're going to come at a time like Murphy's Law, the cash flow is just down.
Yeah, I've actually never saw an insurance audit come at any time when cash is flush. It's like paying taxes. It's always that time of year when you're strapped for whatever reason. So, again, I think you brought up great points, and we're both in agreement, both from the insurance side where you're coming from, and from me from a practical business side. Again, if they truly are classified, like you can have a laborer, but if the laborer is up working on the roof, most of the time they're going to be a roofer. So be realistic. If they're down on the ground and that's all they're doing is cleaning garbage on a big project, you may have these classifications, but I see it all the time. I have 1 roofer and 8 carpenters. Well, that's not going to fly. The auditor is going to know by your revenue you're doing, what you're actually doing. So, again, we say this more often than none. You got to be truthful, and you can do things, but you got to be above board, because if not, it's going to come back at you.
it all comes out in the wash, and it always does. I talk to roofing contractors that try and justify and make the case to us. We're not the guys, you know? We're just trying to help you protect your cash flow, protect the business that you're working hard to build, and continue to move forward and not have this huge exposure on the back end.
So one of the funny things that I've heard throughout the years, and an audit comes out, and we share with our clients up front, hey, here's what you're rated on. It's a $10 rate, basically equates to $10,000 in general liability premium per million in revenue that you do. If we rated you at 1 and you do 2, you're going to owe 10 grand on the back end. And I'm just using round numbers here. I've heard some of my clients come back and say, well, Tyler, we didn't have any losses. So we always say, and by the way, we work for our clients, not the insurance companies. Well, we want to try and drive audits down as much as we can. With that said, I've heard some people say we didn't have any losses. Well, a lot of contracts forget there's a 10-year tail on all these policies up to the statute of repose. Construction defect claims happen very, very often after the fact. I mean, it could be 2, 3, 8 years down the line. And so these insurance companies, I feel that they deserve the premium and they rate accordingly for completed operations as well. So having losses has nothing to do with your audited premium. You're going to owe it at the end of the year, whether you were clean for them and they made their money or not. The rate is the rate, and so budgeting for it accordingly is very important.
Yeah, exactly. Yeah, that's really good, and I'm sure you could give us 1,000 nightmare stories. You know, we wouldn't want to do that because you want to run into client saying it. But definitely, I know I've seen on the other end too, going through it. But so, what are some additional tips? What are some strategies? If talk to me as if I don't really know what I'm doing. Sometimes that's true, but you know, go ahead and talk to me about your client. And it's my first time, you know, really trying to understand putting a strategy. I got burned. Let's use this one. I got burned last year. I really don't want to get burned again. I want to get a good strategy together, how to move forward.
Yeah, and so, John, I would say this. We'll start out here. We have a subcontractor. It's for insurance purposes only. It's we're not attorneys. It's a subcontractor. It's meant to be added to your subcontractor agreement. It's for insurance purposes only. It's a checklist that says, hey, here's what you should be requesting from any sub that works for you. And if they can't check one of these boxes, you should consult with your agent and see, hey, is this going to be a problem at audit? But essentially, on the general liability side, if they cannot provide a certificate of insurance that names you additional insured, waiver of subrogation, having a written contract in place as well. And that's more on the claims side than necessarily the audit side, but having a written contract in place with your subs for every job. So there's no handshake agreements anymore that are going to fly. And so with that, but essentially those checklists say, hey, they have to have $1 million limits. You have to be named additional insured on our policy. You have to be named favor, waiver, of subrogation, and so on. That if they could check these things and you file them with each sub that works for you, you should be good at the end. And that's on the general liability side. Right. And requesting a monthly, like I said, at a minimum. We have other clients that say, hey, we're requesting these every 2 weeks, whatever it may be that you feel comfortable that policy is not going to cancel on your end, then that's an important thing. Now, on the work comp side, again, one of the things we do to help our clients prepare is any new sub that works for you, if it's an employee leasing arrangement we talked about in previous ones, they could have 2 guys on that roster. For audit purposes, as long as you have a certificate, unfortunately, it's following the system. If you have a certificate from an employee lease arrangement and it shows coverage that's dated correctly, you're going to be good at audit. They don't go back and check rosters. We're not saying that you should get in the habit of not checking rosters, because from a claims perspective, if they have an employee lease arrangement, that program's only covering those employees who are on the roster. And so certainly we always advise that, but making sure and having that list for every sub, you should be building a file that's specifically insurance purposes for audit. And that checklist that we provide to our clients, which we could share with you, John, and you could share with any of your, and it's just have some blanks and you can customize it to your company. But essentially just holding that in there and building a file for every single one of your subs that work for you that shows up-to-date insurance on the work comp side, because that's really where they're going to come back. And that could build up quick. Right now, I think, what's the roofing rate? 1043 in Florida right now?
1141.
Or 1141, I'm sorry. That's essentially $11,410 per 100 grand that you process. So if you got a sub that you paid 100 grand and come to find out at the end of the year that their certificate wasn't valid or had canceled, that premium's coming right back to you. And I've seen some add up to a couple million.
Yeah.
And so those become very important, that you have that file built for your clients, making sure those employees are classified correctly. But again, meeting with your agent, we review for our clients any new sub that we can help them build that file for, and make sure that when audit time comes, that their boxes are checked. We review those for our clients. Say, hey, Tyler, Nick, we're looking forward to working with this new sub. Here's what they have in place. What should we be doing to build our file for the end of the year at audit? That checklist is gonna, if they could check those boxes, in most case scenarios, other than some few rarities that we could go on and on about, but you're gonna be good as long as you have that file built.
And that with the subcontractors, like Tyler was saying with the work comp, most of the general liability policies that we're seeing nowadays are also including some verbiage where if those certificates of insurance, that file is not built, the GL carriers can come back at audit and say, hey, look, we're covering your company. You hired these people, you know, the damage resulting to your work on the general liability side. If these folks don't have the insurance that they need, and God forbid a claim occurs, well, that's coming back up to your company. So GL and work comp side, both of which so important to have that information on the subcontractors. And what I feel like I struggle with the most with some of the newer roofing contractors is like, this is not for everyday use. It's not like, this guy can be your friend, but there still needs to be a subcontractor agreement in place, because it's not for when things are going well. It's for when, God forbid, a claim arises. Sure, it takes a little bit more time on the front end to get all that information, get a subcontractor agreement signed. But God forbid, 5 years down the road, if a claim were to arise and, you know, that subcontractor and you are no longer getting along, that claim's going to come upstream to you. So it's just about protecting the business that you're building. And on the insurance side of things, the more that you understand, the more protection you can afford yourself, and the easier the audit process becomes, because it's not so much about getting the premium on the back end. It's to help our roofing contractors and those that need insurance, which is everyone, understand the downstream risk transfer, what that means. And the audit on the back end is not supposed to be punitive. It's just so that the carriers are funded enough so when these claims do happen, as they often do, all parties are protected by it.
That these programs, I mean, work comp, standalone coverage outside of employee leasing, but standalone work comp coverage, general liability, for the most part, there's certain policies that will exclude coverage for subcontractors. We didn't take the proper steps, they didn't have the right coverage, but those typically, we don't recommend those policies. The city policies that we set our clients up with are intended to cover subcontractors, or if they should be the first layer of defense, of course, at all times. But that's again why they have these protocols in place that you need to be checking and building a file on, because if they don't do those things, that claim's rising upstream to you. And that's why, in one of our prior podcasts here, we talked about, so many people know what it's like working for a GC and the information that you have to provide. We tell our clients, don't hold yourself to any less standard than those GCs hold you to, because they're doing that for a reason. They've been tagged, they've been hit at audit. They have so many subs working for them that they know the downstream risk transfer game. There's two sides of that downstream risk transfer. One of it is protecting yourself so that these claims don't hit your loss runs, because even though your policy is designed to cover subs, you don't want them to have to cover subs. But the second side is audit. I mean, nothing worse than finding out at the end of the year that because of somebody else's negligence or them not having the proper coverage in place, not providing you what you needed, that you have to pay a 10, 20, 30, you know, up to hundreds of thousands of dollars we've seen some clients pay on the back end due to just not making sure that their subs have the right coverage.
And if you owe an additional $50,000, say, at the end of the year, I mean, think about how much work you got to secure the next year to overcome that $50,000 hard cost coming out of your pocket, just because these two subcontractors never got you certificates, but you needed to move the job on, you know. And those things we understand certainly, but the insurance carriers, they don't, frankly, they just don't, because like Tyler said, just like the GCs, they've been tagged over and over and over again. And sure, everyday life occurs, but it is so very important to keep up the standard that you're held to as a subcontractor to some of the larger GCs.
No, great. You did bring up a lot of great points. Quick recap on some of them. And I agree with this. Subcontractors is probably your largest liability out there of not, you're going to know what your payroll is. You should know what your revenue is. If you keep track of those things, you're probably going to be in pretty good shape when it comes time for audit. If you do that, like we said, maybe bi-yearly check, depending on the size of your company, where you're at. But subcontractors, you can think they're right, and then they're not, right? And that's the hidden cost if you're really not on top of it. And as you brought up about the GC, maybe you're not licensed and you're not technically a general contractor, but you're acting like one. So you need to act like one in this too, because once you start managing other subcontractors, you are now a manager, not so much a prime, right? You're doing, you've got other people working for you. So, and I noticed over the years, that's some of the biggest things we had trouble with was knowing they're right, even doing that check, and then finding out at the end something was off. That's what we talked about in the earlier ones. Make sure you have a real certificate, make sure it comes from the agent, all those things. That's why I recommend people go back and listen to those as well.
Yeah, and we probably should have brought this up earlier, John, but I mean, just a simple, this is just a financial tool, I guess, to help in projecting general liability with the excess and surplus lines market. I mentioned that these things are one-way adjusting. It is kind of, and I know it's not a game, we take what we do very seriously, and when we're sitting down with our clients at our pre-renewal meetings and making projections for the next year, it has an impact. With volume comes rate leverage, right? If you're projecting to do 10 million the next year and you want a low upfront premium, and you say, hey, Tyler, well, we may not do 10 million, let's rate ourselves at 5. You could do that. You could pay it on the back end. It's not typically our recommendation because you're going to have a higher rate at 5 million than you would if you rated yourself at 10 from the beginning. You're going to get audited at that rate if you're 5 million. So we always tell our clients, conservatively under projecting, but not too far. If you think you're going to, we always ask, what are you confident that you're going to do more than? We don't want to rate you at 5 and come back and find out that you only did 4. You overpaid. You're not going to get that money back in the excess surplus lines market on the general liability. But if you say, hey, Tyler, we already got this much lined up in contracts, we're definitely going to do more than 5 million this year. Could be up to 7. Okay, you're going to do more than 5. You're confident of that. How do you feel about 5.5? And just rate as close to what you think you're going to do, but certainly it's certain you're going to go over. No reason in an agent sneaking by it. Some do it sneakily. We don't like to believe that happens in the market, but certainly some say, hey, they're competing on an account and they rate you at 3 million and the other competing agents rating you at 5, and they say, hey, here's a lower premium up front. General liability is all rate driven. So looking at the rate for the audit, that's all that matters. You're going to true up at the end of the year regardless. It's all rate driven, and that's the most important thing. So projections can have an impact on rate. So that's just a tool to help yourself in the long run.
No, that's great advice. And one thing I just want to tag on to that, we did talk about, but this is more from the contractor side that you got to be careful for. You talked about getting your projections correct. So look at this, and depending on the state you're in, you do work for a municipality or a tax exempt organization, owner direct purchase of materials and so on and so forth. You need to make sure that, let's say you had a huge year where you really did say 10 million in volume, but you really only did 7 for the insurance purposes because it was deductive change orders and, all those things. But keep that in mind when you're doing your projections for the following year to know where you're really at as a contractor, because you're capable of doing that $10 million, right? And if next year you're doing that 10 million, but you projected at 7 and you didn't have those owner purchases, you're off by $3 million, which can come back and bite you. That's something we kept an eye on every year, how much we did in volume of those deductive change orders for owner direct stuff.
Yes, OSIPs, CSIPs, wrap-ups, where the insurance is covered under those programs. Those are all deductible from the general liability audit. So keeping track of those as well. That's a great point. So
Well, on my end, I'm good. We covered a lot. I want to give you guys, as always, closing word. If you got anything that we didn't cover for our audience today on this subject.
I think, and I don't know how you'd share it with the viewers watching this, but Nick and I will send you the subcontractor review checklist for insurance purposes only. And I think a lot of people it'll open their eyes to, hey, we're not asking our subs for these things. And so I think that would answer a lot of questions. And if there was any further, they have our information. But John, we're more than welcome any of your clients to have access to this and adopt it, use it for their insurance purposes, because it'll really help clear things up at audit if you can check all those boxes for every sub.
We'll be happy to put that out there. We can kind of almost do it like it won't be technically an ebook, but we'll do it with a free link. You can go, we'll get it promoted out there where you can go and click on it and fill out a little bit of a form, and you'll get to be able to download it, and we'll share this out and through our newsletter as well. So all you got to do is contact us, reach out to me again. It's always easy. It's jkenny@cotneyconsulting.com. Go to our website, sign up that way, whatever works easiest for you guys, or pick up the phone. We still have phones working today, and texting, whatever works for you. Reach out to us and we'll pass that on. I think that is a great piece of knowledge for everyone to have. We appreciate you doing that.
Absolutely.
All right, well, that brings us to an end. I think this was a really, really good one. And the biggest takeaway you got to take from this is how we open. This can either be a very pleasant experience when you get it done, and you got a smile on your face because you either got it right or you're getting something back, or it could be very, very tough day of your in your company's life, because you're going to find out you got to strike a check and there's really not any grace period. It's due immediately, and you got to get it done. So that being said, thank you for joining us today. We look forward to having you next month, where we'll be wrapping up this series. But I'm going to talk to the fellows here. I got some ideas for a few more in the future. I think insurance is such an important topic in our business. I think we can keep going with some other ones too. So I'd like to say thank you for joining us once again, and look forward to seeing you on the next one. Take care.
Thanks for having us.